All right, let's talk about final accounts for your HSC exams. Look, I get it. This topic can feel like an absolute nightmare, but what if I told you we're about to flip that script and turn it into your secret weapon?
Come on, let's be real. It's final accounts, right? That one topic that probably keeps you up at night. You've got these long, complicated problems, a ton of tiny little rules, and it's so easy to forget them when you're under pressure. But what if all of that is about to change?
Yeah, because right now, in the next few minutes, we are going to smash this topic. We're going to take it from being your biggest headache to, I'm serious, your highest scoring area. You ready? Let's dive in.
Okay, first things first. Before we even think about touching an adjustment, we have to lock in the golden rules. Seriously, this is the simple, unbreakable foundation for every single problem. You get this right, and trust me, you are already halfway to the finish line.
You know, it really just boils down to this one simple idea. Every single item in that trial balance, it fits into one of two buckets. That's it. On the debit side, you've got everything the business owns or has spent. Think assets and expenses. And on the credit side, that's everything the business owes or has earned. Your liabilities, your incomes, and of course, capital. That's the core logic right there. So here's the crucial thing to remember. When you're pulling items from the trial balance, each one goes to only one place. Got it? Either the trading account, the profit and loss statement, or the balance sheet. Just once. But, and this is a huge but, there's a major exception to this rule, and that, my friends, is where the real marks are hiding. And that leads us right into adjustments. This is the battleground. This is where the top students really pull ahead of the pack. Why? Because they understand one simple but incredibly powerful rule that controls every single adjustment you'll ever see. And here it is, the double effect rule. You know, so many students lose marks on this. They post an adjustment in one place and then just move on. No, you can't do that. Every single adjustment has two effects, two homes. Forgetting that second one is hands down the most common mistake, and we're going to fix that right now. Okay, let's take a super common example, depreciation. Think about it. It's an expense, right? It's the cost of using an asset for the year. So what's its first effect? Well, it hits the debit side of your profit and loss account, which of course reduces your profit. Simple enough. But wait, where's the second effect?
And here it is, the second half of the puzzle. The asset itself has lost value, right? So you have to show that. The second effect is you deduct that depreciation amount right from the asset on your balance sheet. So, see, you've got one effect on your profit and one on your asset's value. Double effect, every single time.
Now, I know what you might be thinking. That sounds like a lot to remember for every single adjustment. But I've got some really good news for you. You do not need to memorize like 50 different adjustments. The reality is, exams test the same core group over and over again. You just need to master these 10. Get these down, and you're pretty much ready for anything they can throw at you. All right, here are the first 5 big ones. Let's take a look at outstanding expenses for a sec. So you've used a service, you've incurred the expense, but you just haven't paid the bill yet. So effect 1, you've got to add it to that expense in the P&L to show the true cost for the year. And effect 2, well, it's a liability. You still owe that money, so it goes on the liability side of the balance sheet. See how that works? It's pure logic. And here are the remaining 5. Now notice a pattern here. Look at bad debts and RDD. That's your provision for doubtful debts. They both hit the profit and loss as an expense, and they also directly reduce the value of your debtors on the balance sheet. It's always about showing the true profit and the true financial position of the business. Okay, so we've got the rules, we've got the key adjustments. Now let's talk about the secret codes. These are the mental shortcuts, the little hacks that are going to help you solve these problems way faster and with a lot fewer errors, especially when you're under exam pressure. Okay, forget ever second-guessing yourself again. Just burn these 2 acronyms into your brain. First up, DEAD, debit all expenses, assets, and drawings. And for the other side, CIL, credit all incomes and liabilities. Seriously, if an item from the trial balance fits one of these, you instantly know where it belongs. It's a foolproof check. Oh, and this one? This is a classic exam trap. They will give you 2 different values for closing stock. The rule is absolute non-negotiable. You always choose the lower of the 2. And you might wonder why. Well, it's all about an accounting principle called conservatism. The basic idea is you never want to overstate your assets or your profit. You want to show a realistic, not some overly optimistic picture of how the business is actually doing. And here's another favorite little trick question they love to throw in: commission calculations. You have to pay super close attention to the wording here. If the question says before charging commission, great, you use the simple formula, rate over 100. But, and listen closely here, if it says after charging, you absolutely must use the other formula, rate over 100 plus the rate. It's a tiny detail, but it makes a massive difference in your final answer.
Okay, we've all the pieces of the puzzle. The rules, the adjustments, the secret codes. Now, let's put it all together into a clear, step-by-step game plan. This is the exact process you need to follow in the exam to nail that perfect score.
This 3-step process is your road to victory. Step 1. Before you write a single number, go through your adjustments and just put a little mark or a star next to every related item in the trial balance. This is huge. It stops you from forgetting them later. Then, Step 2. Solve it methodically. Do the trading account, then the P&L, then the balance sheet. Don't jump around. And finally, Step 3, and this is crucial, always leave time for a final check.
And this is exactly what that final check looks like. Number 1, the ultimate test. Does your balance sheet tally? If those totals match, you are probably in great shape. Next, did you remember to put the closing stock on the asset side? It's such a common thing to forget. And most importantly, did you go back and mentally tick off both effects for every single adjustment? This checklist will absolutely save you from silly mistakes.
So there you have it. You've got the golden rules. You understand the double effect logic. You have a rock-solid game plan. You literally have everything you need. So the next time you see a final accounts problem, you're not going to feel that dread, are you? Nope. You're going to see an opportunity to score big. Now, go make it happen. You've totally got this.